Hi, my name is Richard Hutton and welcome to the Exponential Fund, the place where you learn to invest and absolutely crush average market returns. Today is an update on why I had to tweak the rules of my flagship strategy. So as you may or may not know, I use Etoro to invest my money using my flagship strategy called the Exponential Fund, which essentially is to invest long-term in big companies that grow fast. Now, in September of last year, I implemented this update where I would specifically look out to buy companies which recently crashed in order to profit from the potential sharp bounce back. But since then, the market continued crashing, especially in high growth tech stocks. So, on Etoro, I also am enrolled in the Popular Investor Program, which means if other people like the way I invest, they can copy my trades on Etoro. So, if you don't know about this feature, you can make an account, search my profile, like on any social network, right? Richard_Hutton. And on my profile, there's a button called copy. If you click that, all my trades are automatically copied in your account without you having to do anything. So it's as if I'm managing your money, but your money stays in your account. And I get paid a fee by Etoro, about 2% per year. But that fee is not paid by you, right? It's paid just by the platform. So, because I am, responsible now for your money as well, Etoro gives me a risk score from 0 to 10. And I must maintain a risk score of maximum 6. Right? So I don't do crazy stuff with other people's money. Well, multiple factors are put into the calculation of this risk score, including leverage, which I do not use. Also, how concentrated is the portfolio? My portfolio is fairly well diversified, so each position is about 5% of the portfolio, right? I have 20 stocks, not just, YOLOing into a single company. But they also look at simply volatility. All right, so from day to day, how big are the fluctuations? And in this case, especially this specific few month period, it was very volatile. So, oftentimes we saw 5% fluctuations. Well, in this case, more to the downside. Happens. And I've reached the risk score of 7. I received an email from Etoro saying, hey, stop that. Get your risk score down. Plus, you're blocked for 2 months. Nobody new can copy you. And get your risk score down. Otherwise, strike 2. Okay. Well, the first step that I did, by the way, I was not happy with this message. I have a different belief regarding what is risk. I do not believe risk has anything to do with volatility. I believe risk simply means the probability that your investment will be profitable after a certain amount of time, which frankly you decide. So it's a personal judgment. In case of long-term investing, or like specifically my strategy, I would say 5 years. Like I buy a stock now, or I invest right now, and you gotta give it 5 years to judge it. If we wait 3 months, dude, I have no idea. The portfolio could be up a lot, could be down a lot. Like if the portfolio was up 20% in 3 months, I will make a video and say Please do not expect the portfolio to be up 20% every 3 months. It won't. This is an unusually good period, right? Same way on the downside. The portfolio could be down 20% in 3 months. And I would say, look, calm down. These are normal fluctuations in, like, okay, it is a big fluctuation, but these are high growth tech stocks. They are more controversial, so they will move more. Now, because I invest in fairly large companies, so their market cap is tens of billions, hundreds of billions, mostly, and they are growing their sales very fast, like abruptly, I believe it is quite likely that these companies will be way larger 5 years from now, right? So the portfolio will be up a lot, right? The probability of that, I believe it's a lot. So way more than 50%. So like the risk is small. Is this investment risky? I'll say no. Not that it's not risky, but low risk. But, in finance, there's this belief that risk means volatility, so whatever. To comply, first I simply sold a bit. I trimmed each position, so I had 10% of the portfolio in cash. And my risk score was still 7. Fuck. Okay, I sold a bit more of each position, so I had 20% in cash. And the risk score was still goddamn 7. Fucking shit. Okay, so I did the new measure, what I want to tell you about. I made the strategy a bit more conservative. So, like version 1 of the strategy from a couple years ago was that I would invest an equal amount in the 20 largest companies that have been growing their sales by an average of 25% per year for the last 5 years, right? And in the first 12 months, the portfolio was up 28%. Not bad, right? Right on the money. Then the next version was, okay, not just the largest 20, but specifically picks the ones that crashed recently so you can profit from the, potentially sharp move up. But that didn't work because Etoro doesn't let me be so risky. So I went back a bit, but not quite. I did implement a tweak to the initial. So yes, I put an equal amount in the 20 largest companies that have been growing their sales by at least 10% every year for the last 5 years. Now, how does this compare? At least 10% every year versus 25% per year on average, right? It might not be immediately obvious. It does, sounds like this 25% is more, but it is not. Because what happened in this scenario, there were some stocks which in the last few years actually kind of peaked off, like they had 3% growth, right? Which is not good because it means, they're potentially at the end of their S-curve. Plus, with the, 2020 world crisis, some companies suffered, but other companies grew continuously. So why don't I just invest in companies which are essentially recession proof? So Uber was hit in 2020. Amazon fucking flourished, right? So actually I am more strict in this new scenario, that I do not allow for the company to have even a single bad year. For example, Nvidia had a down year, I think in 2020, and it's not in the portfolio. Now, from an absolute standpoint, is NVIDIA a good company? Sure, it is large, it is growing fast, it has good profit margins, but it had a down year. It is susceptible to crises versus other companies like Shopify, just fucking straight to the moon. So I'd rather have companies like that, which are unaffected. Right? So that is the tweak I implemented, and it did work. It worked. I just checked. The risk score did go down to 6. So hopefully, I guess in like a month, people can copy me again. New people. All right. That's it for today. So, quick recap. The Exponential Fund is invest long-term in big companies that grow fast. If you're interested, you can check out my profile on Etoro. It's Richard_Hutton. And until next time.